How have firms in emerging markets coped with COVID-19? Thorsten Beck of City's Business School and his colleagues have used a combination of survey and financial data to find out. Hello, Thorsten.
Hello, how are you?
Now, what is it about firms in emerging markets that might make them particularly vulnerable to a COVID-19 lockdown?
So in general, economies in emerging markets and developing economies are characterized by a large share of informal enterprises, smaller enterprises, which means it's much harder to control them if the government and want to enforce a lockdown. It's much harder to reach them if you want to help them. A second characteristic is that the service sector is very large in many of these economies, but at the same time also it's much more difficult to work from home. So customer contact is much more important in many of these professions, in many of these sectors in emerging markets, and working from home is much more difficult. So all of this makes a lockdown, as we've seen it in many advanced countries, much more difficult to enforce, much less practical also than in the advanced countries.
And can we generalize about how strict emerging market governments have been in shutting down their economies?
No, actually, there has been a lot of variation. I mean, similar to what we've seen here in Europe. On the one hand, for example, Spain, extremely rigid, where kids couldn't go out on the street, and then on the other hand, Sweden, where everybody could almost go their normal lives. Similarly, in emerging markets, we had cases, El Salvador, Vietnam, very harsh lockdowns where you almost weren't allowed to leave the house. On the other hand, Turkey, but also Brazil, for example, where there was a rather more lenient approach, much more lax approach to lockdown, and sometimes also variation within countries, as for example within Brazil.
Now, you did a survey to find out about how these firms have been getting on. Can we say that the firms in the survey are representative of the economies?
Yes and no. So they're not representative of the typical firm that we like to think of and that I mentioned earlier. So these are not informal or small firms. These are the largest firms in these economies, large listed firms. Now, on the other hand, I would say they are representative because they actually make up a big chunk of these economies. So to see how they fare gives us some insights how the overall economy fares, including, of course, all of their suppliers and the business partners they are involved in.
And so how have they done? How hard are they suffering financially?
Yeah, well, I mean, not surprisingly, 3 out of 4 do report that they have been negatively affected by the pandemic. Now, there has been, of course, variation. So, for example, in Indonesia, and that's again, it's a snapshot at the end of April, we find that only a little bit more than half of the firms were affected. In Bangladesh, 9 out of 10 firms were negatively affected. There is also variation, of course, according to sectors. Not surprisingly, utility companies, most of them, actually 60% are not negatively affected. On the other hand, firms active in consumer goods, 86% are negatively affected. So there's lots of variation, of course. Overall, I mean, so this is a snapshot at the end of April. We went back to these firms in end of June. And even a higher share then said, well, yes, we have been negatively affected in terms of sales over the past 2 months. So it's not there is kind of a picture that, yes, the large majority of firms have been negatively affected by this pandemic or by the crisis that comes with the pandemic. Now, but it was a bit surprising for us that many of them do not seem to have problems with, for example, debt payment or covenants. Funding problems, at least not immediate funding problems. But again, we ask end of April, so maybe that's something that will be more prominent down the line in a couple of months.
Now, there is less capacity for many governments in emerging markets to support firms. How extensive and how important has direct government support been to firms in these markets?
Well, when we ask in late April, only a third of firms, so 1 in 3 firms, said they do actually rely on the government to get help. So that's not a lot. Actually, much less than I would expect, and it kind of reflects what you mentioned earlier, Tim, that the governments there in these emerging markets have much less leeway in order to support their economies, especially if they have a fiscal straitjacket. But not only that, so it's not only on the support side, it's also that many of the firms kind of took actions themselves in terms of how to react to the crisis and to the pandemic. So when we asked, did you put certain measures in place to protect yourself, your employees, your business partners before the government announced any measures? 70% of firms says yes, we actually were faster than the government, which reflects a bit also anecdotal evidence that in some countries governments were very, very slow to actually react to the pandemic. And so it's good to see that firms actually were on the ball, so to say.
Now, when firms are reacting to the pressures that they're under during the pandemic, how much flexibility do they have?
Well, so you can think about cutting expenditure on different sides, right? So you can think about reducing your payroll, which in emerging markets typically should be easy because these are generally flexible labor markets. But you can also cut down investment and kind of stop your growth projects. What we've seen is actually firms did not cut the payroll. They did not cut even like employee benefits. They really went for investment. So most of the firms cut investments. Very, very few cut the payroll. Some actually expanded employee benefits to kind of support them during this pandemic. A second important finding that we see in the data is that there was a lot of support for the broader community by these firms, and that ranges from not kind of chasing down business partners that owed money, but also providing donations to the broader economy. So we have a lot of examples. So it's not just we ask these firms, have you given any donations? I mean, it's easy to say yes, right? But we have lots of examples where, for example, a firm provided storage space for COVID-19 material, or a taxi company provided free commuting services for nurses, for example, or a garment company changed their production to face masks. So, and then gave these either for free or at a reduced price to the government or to the nearby hospitals. So there was a lot of involvement of firms, not just protecting their workers, for example, but also their business partners and their community in which they are active, which is a very kind of positive thing that we found.
Well, I mean, it's a positive thing for the workers. It's certainly a positive thing for the communities, but is it optimal for these firms, do you think?
Well, if you take the view, it's kind of all about short-term share price maximization, or the return of shareholders should be the primary concern. Maybe it's not. But on the other hand, we know that in many emerging markets, relationships are very important. Firms are not standalone. They work in a broader landscape, in a broader biosphere of governments, of business partners, of maybe also competitors, their workers, suppliers, and so on. And maintaining these relationships and being supportive of the environment and in society, I think can actually be helpful for these companies in the long run. So in a sense, it is a win-win. It is a win for the society, but it's also a win for the firms. And actually, we also see this even in the share prices. So we also looked at the share price reactions and kind of correlated that with these different survey answers. And we do find actually that the markets in these 10 emerging markets that we looked at, they do seem to they reacted positively to these stakeholder-centric responses by firms.
In general, how did the share prices respond to the pressures that these firms were under?
Well, not surprisingly, they reacted negatively. What we found interesting is we looked at two periods. We looked first at 2 months before our first survey, which was end of April, and then the 2 months from end of April to end of June, which then at end of June we did the second survey. And we would have expected most of the impact on stock prices after the first survey, because then the information was basically already available. Given that these are public companies, the information that we got through the service is not really private information. It's pretty much public information, especially for market participants in the emerging markets. So we did see, of course, a negative reaction during these first 2 months, but we saw another kind of negative reaction during the second 2 months, which kind of reflects that these markets are not completely efficient, that the information is not being reflected immediately, but kind of over longer time periods in these stock prices.
Can we draw any conclusions, Thorsten, about the long-term resilience of the businesses in your survey from the information that you found out?
Yes and no. So I would say first, no, maybe. This is really a snapshot. So we did the snapshot end of April. We did another snapshot end of June. We might do another snapshot in the autumn. So it really gives us kind of an immediate reaction how these firms were dealing. And of course, we know also from the advanced countries that a lot depends on how the pandemic develops, a lot of how quickly countries will be able to open up again, how quickly global trade will recover, and so on. So on the one hand, it's not really that easy to get a kind of long-term view on the firm performance from these surveys. On the other hand, I would say yes, we can get some picture and some kind of reassuring picture in the sense that we see that many of these firms reacted quickly before their own governments in terms of actions to protect the firm, to protect the stakeholders, society. And this was also positively recognized by stock markets where these things happened. So in this sense, yes, it gives us a positive picture that if firms do the right things, so to say, then yes, this will have positive long-term repercussions.
Okay, Thorsten. Well, if you do get the chance to do the third snapshot, we look forward to seeing it, but the paper's very interesting. Thank you very much.
Thank you.
The paper we've been discussing is called COVID-19 in Emerging Markets, Firms Survey Evidence. You'll find it in COVID Economics 38, and the authors are Thorsten Beck, Burton Flynn, and Michael Homanen. Stay safe, and we'll see you soon.